at the obvious, where public money comes in, and then professionals, we're selling, you know, the guys like me, we're selling to you at resistance, and then the market plummets right back down, and you wonder, but why? It poked its head right above 1730. That's why. You need to have a false breakout filter on the market. So I'm going to use 1735 as R2, at least in my own capital accounts. Okay. Let's take a look at some of the best of the swing trading charts out there. I'm going to start off with a budget one here, PVA. The ticker is in Papa Victor Alpha. PVA, you can see it's gone from 630 to 790, just under 8. That's a near 2-point run in just a couple of weeks in this inexpensive instrument. Good volume and volatility. What I like about this is that every time it's made a cut breakout pattern, you can see it's done a continuous breakout. So for a cheap stock, this PVA you might want to keep on the radar. Next up, to the type that I like to trade, STZ. Another big runner from 56 to 63, a 7-point run in STZ, Constellation Brands. And you can see here, minor gap continuation on Friday. And for those of you who are in my howtotradegaps.com training, you know how well this works, right? Well, you see these minor gaps often gain a foothold and run up. In this case, 2 points, 2 whole sticks, as we call Wall Street, we call a stick as a point. 2 sticks on Friday, so really good volatility in that one. Keep an eye on this one, STZ, if it takes out new highs in the week ahead. Next up, Time Warner, TWX. The strength of this, and if you pull up the daily candlestick chart, one of the things that I've been teaching you guys for years is look for entries on the day after. Actually, it's 2 days after, not the day after, the second day after a wide range candle that takes things out to new cup highs. So if you have a cup pattern, let's see, move this in. So you have a cup pattern, it moves up here, wait for not the day after, but the day after that. So that's coming up. So keep an eye on Time Warner. We had a big wide range candle day on Thursday along with the broad market, and you can see not only did we take out previous resistance, but we took out that secondary cup on Thursday's price action. So keep an eye on Time Warner to see if it's able to take out new highs in the week ahead as well. We've got really good price action Thursday, Friday, minor gap continuation runner as well. The fourth of our swing trading chart picks is UBNT, which is, I don't even want to pronounce it, Ubiquity Networks, whatever. But take a look at this thing. It's moving up to 38. What a run, a 10-point run from 28 to 38. In UBNT, so I like there's probably a joke in there somewhere. Anyway, inverse head and shoulders here, right? Actually, to extend that back, we have a left shoulder, a head, a right shoulder, popped up to new highs on Friday. We had a shooting star right here, right, and a 15-minute candlestick into the close, so we don't want to hit it until it goes over 38.50. But keep an eye on UBNT for the week ahead as well. The last of our swing trading stock chart picks is WLL. Whiting Pete, and you can see the reason I like this one is not only did previous resistance provide new support, which is a good pivot play, by the way, but Friday's price action was able to poke its head above previous highs. So we got from previous range cup that took out new highs, and we're able to continue on up on a high volume close on Friday's session. So you can see here, my competitors are watching this and saying, how can I compete? The guy's a real trader, and he's an ace presenter. Anyway, you can't. Become an affiliate at JV, you know. It's all good. It's 63 to 66. That's a 3-point run in WLL on Friday's market. Absolutely worth keeping on the radar for the week ahead. We had a lot of minor gap continuations on Thursday. If you're in my live trading room, you saw how well we nailed those. Well, anyway, you can see how well the market moved. Let's see if WLL takes out new highs in the week ahead as well. Next up, for those wild and wacky day traders, what do we got? Hertz. Gap reversal play with Thursday and Friday price action. Let me pull up the day trading chart here for you. One of the patterns that I was teaching my traders, and I'll be teaching you guys in Breakout Mastery once you register now at Breakout Mastery. I got my Oktoberfest special going on for another couple of weeks. The next session is coming up this Wednesday. We do these the third Wednesday night of every single month throughout the entire year. It's an ongoing series. And they have 4 additional events too. So you get 1 year access. You get a total of 16 webinars for less than $50 a webinar. So it's a good deal. Normally my retail's $100 a webinar, so it's half off. through into the month here at Breakout Mastery slash, and I know I didn't spell that right, Oktoberfest, for all the spelling freaks out there, but that's how I like to spell it, with the C. So anyway, Breakout Mastery Oktoberfest. Take a look at that and see if it can help you. It's hundreds of trade. You have almost 300 comments from traders on the site already, so take a look at that. Anyway, for our breakout day trading, we've got HTZ is one, and again, I like this because it's got over a 1 point run. And the other is Tesoro, one of our oil plays. This is a minor gap. Well, not actually a gap. It's a eclipse. I call this a closing range reversal here. It opened up kind of a bullish. It's not a technical bullish engulfing from a candlestick standpoint, but it engulfed the previous day's closing 15 to 30-minute range. And that's one of my favorite plays. I'm an expert in open range breakouts. A lot of people rip me off and copy me, but I'm also an expert in trading the closing range break. And one of the things you want to look for is the last 15 to 30 minutes of price action. If something comes from below and traverses that price action, parking a buy stop limit order, that's what I like to do. Put a buy stop limit order right above that closing range with the stop right in the range, so it's a tight stop. That's usually a good lift. If it comes from below, traverses price action, the traders, professional traders, we know to look for that. It traverses price action, you hit the buy there and watch it take off. All my competitors, they're scrambling down and taking notes so they can copy me. Lamers. Anyway, take a look at that one. TSO, I'm rich, so I don't care what they do. Anyway, 43, it's good to be the king, like Mel Burke said. 43 to 46, three-stick run, 3-point run in Tesoro. Absolutely a day trader's dream stock. We'll see if that one punches to new highs. We have a tweezer top here, right? On that Friday, look at up here in the upper right. You can see 46.20. I'm not gonna buy this one unless it breaks 46.50 myself. So at least 30 cents above that closing, or the, should say the high of day. So 30-cent trigger above the high of day, 46.50 in Tesoro. Really good play there. Where'd that day trading chart go off to? One of the things that I want you to learn about, and this is especially important, a lot of you struggle probably with not knowing the right instruments to trade. So even when you try and apply your technical analysis to a breakout, you get a breakout that moves and then false breakout and it fades back down inside the range, right? And that's kind of the bane of a trader. That's what we deal with. Well, as an expert in breakout trading and a guy who's traded millions of dollars worth of these, thousands and thousands of trades since the late 90s, I'm a real trader. I'll tell you this, you need to learn how to differentiate the strongest of the breakouts from all the other 98% of what's out there. So whether you're learning from me in my live trading room or one of my premium courses, or even my free webinar events like this one, or my dozens of industry articles I publish, make sure that you're able to trade the difference between those, right? Understand the difference between the strongest of the breakouts and things that look like they're going to move, but you should be more skeptical and say, no, I think it's going to fade back down, and often it will. You say, well, I said dodged a bullet that time, eh? Make sure that you're trading the strongest of the breakouts selectively. Okay? Trade slow to enter, fast to exit. That's my maxim for professional trading. At least that's how I've done it since the 90s. I'm very cautious and selective about what I want to trade. Let's move on. Gap charts. Here's one. SAVE, Sprint. Look at that. Here's the gap in SAVE. It's probably better to use a 2-day chart on that so you can see the closer context. Anyway, as I teach, gaps continue most of the time, and I'm right about that. Well, take a look at this chart. Gapped up from 33.5 to 36.50 yesterday, ran up another 3 points before giving up the ghost and fading back into the closing range. And sure enough, we have bearish upper shadows and a bearish engulfment there going down into the range. Bullish hammer leads to a little spike into the close. Micro cup patterns and candlesticks, as taught only by Steve Nissen. Don't learn candles from anybody but Steve. Everybody copied and ripped him off, just like everyone copies and rips me off. Learn from the original guys, right? The professionals. Anyway, leave everybody else alone because they don't know what they're talking about. They try and water, how to say, you're getting watered down stuff because a lot of our competitors rip off our stuff and then go off and act like they're experts. They're not. We're the genuine experts. We got a lot of copycats. So you guys know that, right? You're smart. You know to only learn from people like myself who are real traders with P&L proof, and you know better than to go buying shiny, bright new objects just because somebody has a cool-looking website. You're smarter than that, right? Just checking. Okay. Anyway, save. Look at that. This puppy gapped up 3 sticks, 3 points, and ran another 3 points. Don't be that chicken trader who's afraid to buy new highs. You know, the amateur. How many of you were trading Sprint? Yeah, it was or I'm sorry, Spirit Airlines. I was thinking Sprint, Spirit Airlines. Anyway, SAVE. How many of you guys were trading that on Friday? If you're an amateur, that probably looked really expensive. Okay, professional traders, we specialize in the upper right side of the chart. That's where I dance. That's where I make my money, is buying the upper right side of a chart from some guy and selling to another guy to further up right side of the chart. That's how professionals trade. Anyway, we don't try and fade the gap. Ooh, let's short this because it went up and that looks really expensive. Thanks for playing, Sparky. Boom, shakalaka. This puppy ran on up another few points. That's what you want to do as a professional trader. Okay, hit and run. Nail these puppies on breakouts. Look at cut patterns. You want to be cautious and a skeptic, fine. Wait until 35 cents or so above that cut pattern high, as I've published for a decade, over a decade now. Okay, what else we got? Solar City. Solar has been strong lately, and SCTY has been no exception. With a gap continuation runner, another cut pattern, again, minor gap. Amateurs would have said, looking at this, well, it went from 38 to 41. Well, that's too expensive. Let me short it there and try and make money on the way down. No, don't do that. That's bad. That's what amateurs try and teach. Professionals, we buy gap continuations. That's what we do. That's my favorite play, is taught in my How to Trade Gaps training. And I hope those of you who are in that course, the dozens of you enrolled in that, our last session's coming up this coming Tuesday. You can't enroll anymore. If you missed it, too bad. You snooze, you lose. You're out, baby. All the dozens of you who are in, I hope you're practicing with these and profiting from the gap continuation runners. These are some of the very best charts out there. You have my word on it. It's what I do in my own trade. So anyway, minor gap, bullish cut pattern, good high volume, and boom, it ran up another few points. So SCTY, keep on the radar for the week ahead as well. Next up, we're going to cover our ETFs, E-minis, and Forex. And I'll stick around for a few minutes to answer questions. Hey, what do you guys think? I know, who is it? I forgot his name. Leonard, I think it was Leonard. Yeah, I was saying, where's your arms and legs? So I got a good professional backdrop here, and you know everything else. So hopefully you can see me a lot more clearly than the first beta test I did last week. So anyway, yeah, Safeway, right? I believe. Anyway, SWY, you can see the gap was by no coincidence right at the previous high. By the way, here's another learning tip. As you're exploring the charts and you're discovering how to trade, like a professional trader, drop down from these swing trading charts to the daily charts, and often they'll reveal clues. You can see, well, here's an earlier gap. Now I missed this one. I didn't get that one, but it was a nice big gap that ran up, for a gap from what, 28 to 30. Now it's up to 34, right? Minor gaps continue. Minor gaps continue over and over again. Any professional trader will tell you that. Well, anyway, you can see this one did another gap up yesterday, and the clue in the chart is there is a sequential, it's what I call a second chance gap. Oftentimes volatility leads to additional volatility, and similarly, minor gaps lead to additional minor gaps, which is especially good for those of us who do swing trading as well as intraday trades. Keep those on the radar for, even if you miss the first gap, which you will most of the time, just be honest. I mean, I missed this one. I didn't catch the Safeway gap back on September 18th. I missed that one, but I knew this one, or on the radar, I was watching for another one, because frequently you get a minor gap, and then a week or two later you get a secondary or third gap, even a few days later. So initial gaps are the single strongest signal you can keep on your radar as a professional trader or retail traders trying to make some money in the market. So keep an eye on these patterns as well. All right, next up are ETFs. Finance and OIH leading the way. What I like about this one, this is FAS for our ETF traders. You can see this one ran all the way from a basing area right near 67 up to 72, mid 72s here, 72.50. What I like about this chart is that we are now right under previous 15-day high resistance. So we cleverly know not to buy right here, right? But maybe 73.50. Again, it's not a buy and sell recommendation. This is just for learning the chart patterns. And I want you guys to learn. Paper trade this stuff until you get it. Well, you can see 73.50 would be a likely inflection point or breakout continuation trigger. One of the things I like about this chart, the way I trade these, is set your exit target by looking at the likely cut pattern that was formed earlier. So if I buy this thing at 73.50, my exit target, who can tell me, is going to be where? Meaning what? I'm not going to just sit there and passively wait. I actively trade. I'm a mechanic. I will tighten in a trailing stop like a logarithmic curve, tighter and tighter as it gets near previous resistance, which in this case is at 77. So once we break 76, let's say I hit this thing at 73.50, I'm going to tighten in a trailing stop to just under 76 if and when it gets there, because I'm going to anticipate other sellers are going to come in and hit the ask and drive the price back down near 77 on a swing trade. So make sure that you're using that and you set up your kind of a deadline or a profit target right under the public money obvious area. You want to get out a little bit earlier than the public so you're not in reaction mode. Okay. Anyway, let's see what else. The other one was OIH. It's the oil holders. You can see OIH. Another, what I like about this one is another bullish cup pattern, an inverse head and shoulders. 48.50 the resistance. And if you pull that down on a 90-day chart, you can see that's also 90-day resistance. So we're up near a 90-day high, which is good. Kind of like a 52-week high thinking for equities trades. Well, we're at a 3-month high in OIH, which is another good breakout play. FAS also a strong momentum runner in our recent charts as well. Okay, for my E-mini traders, let's pull up the E-mini chart. Look at this 3 days of run in a row. The first obvious pattern is a cup. That's my favorite pattern. You have a cup, then a minor gap, and then you buy highs above that minor gap. And you can see the E-mini did that exact pattern back on Thursday. Minor gap, continuation cup runner, and this thing ran all the way from a low of 1640-ish up to 1700, right? So a 60 handle run in the ES, 60 points. It's a big run, right? Hope you guys are on the right side of that too. I don't know how many E-mini traders I got out there, but let me give you guys my two R1 and S1 levels. A lot of my E-mini traders tune in Saturdays exclusively just for this information. Remember, I also run E-mini University, just like Swing Trading University and Day Trading University. I'm the original university guy. Everyone else ripped me off, pisses me off. Anyway, well, what are you going to do? It's like one of my colleagues told me, he's on CNBC, he said, hey, well, that's the price he pays. You get near the top of the pyramid, you got competitors that come in and knock you off or try and rip off your ideas and all that. So that's why I document a lot of what I do in public, what do you say, like the Money Show Expos and my public articles, so that my ideas are documented just like my colleagues are. E-mini triggers. R1 is 1704.75. 3 ticks over 1704. R2, I want you to use 1708.75. I write these down ahead of time so I remember. 1704.75 and 1708.75. So a 4-point spread, a 4-handle spread on a new high breakout continuation play. And as a safety buffer, I always like, for my long trades and my E-mini trades, I like to use 3 ticks above the whole number high. Just like on the short side, I will do 1 tick above the whole number low. In this case, 1682. Be a little more aggressive on this. 1682 is the first place to look at for support, because we got a hammer low here right at that 1682. I want you to use 1681 and a quarter. Okay, 1681 and a quarter is going to be our trigger point on S1, right there. So we wait for a low of day by at least 3 ticks. Is this kind of a false breakdown filter in case it bounces near there? 1681 and a quarter. Next S2 I want you to use is 1673.25. And I put these together based on looking at these charts ahead of time. And the reason for that is this is the support low here right near 1676. So I want to give it at least 3 handles down, 3 points down before we look at our secondary short. So our resistance triggers are 1704 and 1708.75, and support triggers are 1681 and 7 handles down from that 1673.25 on the short side. Okay. Really good move in the E-minis too. I believe E-minis to be, next to penny stocks, the riskiest, most dangerous, and lowest odds things to trade. Kind of like derivatives, like options. Those are not smart. Those are not, I know a lot of people, ooh, but options are cheap. Fool's gold. So are penny stocks. Cheap. Fool's gold. Professional traders, we like to trade stuff between 30 and 70 a share on swing trade and day trade breakouts. That's how the majority of my trading capital, my own actual live trades, is all doing that. I've tested out all the other types of, or a lot of the other types of trading styles. At least that's what works for me. Your mileage might vary, but Make sure you're trading high volatility, strong instruments. Okay, let's take a look at our Forex charts, and then I will open it up for Q&A. The first one is our, let me push this up here for you guys. US dollar to the Japanese yen. You can see this one has done a 3-day breakout. And the yen's weak. Also, I mean, the euro yen is climbing up sharply too, but I like the dollar yen because it has a longer run off the base. Okay, good uptrend continuation, running into resistance right near the 98.7, and likely we'll have major resistance at parity or at the 100. But keep an eye on the dollar yen for the upcoming week ahead as well. The second of my 3 Forex picks is US dollar. Thankfully, is coming back a bit here. You can see the dollar against the Swissy congestion near previous high. And by the way, for Forex traders, that's why you want to use 3, 6, 9, 12. Okay, 12, 1, 2, 12 days of price action, because the leftmost side of that cup on a 12-day chart is what you use. Get this right. And the leftmost side of the chart is what makes the cup that you look for a right side breakout. But you need to avoid false breakouts and anticipate those every time you trade. And that's true for stock and many traders too. Our challenge as traders is to avoid these false breakouts right above the obvious previous resistance. So when in doubt, use at least 30 pips above the previous high as kind of a false breakout filter. And even if you get, you know, the false breakout that takes you out with the small stop, you reset new highs above the previous high for continuation play. And often it's that second trade that makes you whole and makes the trade work out. So make sure you're using a more intelligent approach to your entries and exits as well. And the last one, Aussie dollar. Aussie, Aussie, Aussie. Hoi, hoi, hoi. For all of you who are from Australia. Our cheer, right? I know a lot of people from Australia. Anyway, you could see uptrend continuation 94.90 is the resistance here. I like the fact that we're coming up off the base. I don't like the fact that we've got a weak ADX. So wait until that ADX pierces 30. Okay, ADX breaks out over 30, and then look for an uptrend continuation play in our Aussie dollar. So I like the fact that it's slowly gathering steam to the upside. And if you look at a daily chart, you can see it's a nice uptrend continuation play. Kind of an inverse, almost an inverse head and shoulders here. Left shoulder, head, right shoulder. So anyway, see if this comes back to life. And if you're doing long-term swings, actually I would use right under the 1. The parity is a likely exit target right there. So that would be the trade there. If you flip and scalp to the short side, make sure you're using 93 and 89 as your support regions to the downside. So either way you trade it, make sure that you're on the right side of those charts moving forward. All right, well, that's been a quick half hour, and I'm on time here with just a minute to go. Let me know if any questions. One of the things that I want to cover for you guys too is, and if I had to pick the best of the charts out there, oh yeah, the last thing I almost forgot. Well, just remember to sign up for Breakout Mastery and Forex Live Profits. If you're a stock trader, you want to go there. If you're a Forex trader or want to learn how it all works with advanced strategies and live market charts and the rest of it, live at the MGM Grand. I'll be there this November 19th and 20th. We have all-day sessions. It'll be really fun, too. You have my word on it. Those of you who've been to my earlier sessions, you can apply what you have here to stocks, too. I have very good breakout patterns that are easily migratable over to stocks and ETFs and minis and whatever else you might be trading. It's the thinking of why the reason for the entry and the exit and crossover patterns and the rest of it that you're looking for, that you really want to seize the opportunity and be a member of this. So this is good. My first live seminar in 3 years. Okay. It's rare for me to make live public appearances because I don't need to, but I come out of the back cave every few years and do a live shindig, and this is my best yet, Forex Live Profits in Vegas. You have my word. It'll be very good. I even have satisfaction guarantee on this and a ton of bonuses and hundreds of comments and all the rest of it. So we also have a bring a friend for half off, too. So that's another special that we've got as well. So anyway, keep exclusively, I'm adding this to the broadcast each week. For my live room members, those 5 charts are now in the members area, the identity of which is a closely guarded secret. This is one from last week. And I told you guys long this at new highs, and you can see it took out new highs. That's also on the radar for this upcoming week ahead. My 5 best charts are only for my paid tradingtheopen.com members, of course. I'm not a fool. I don't give away my best stuff. Inconceivable. I was watching Princess Bride with the family earlier this week. I do not think that word means what you think it means. I love that movie. Anyway, that's my favorite movies. Wizard of Oz and the James Bond, Goldfinger, the Bond with Sean Connery, and a lot of classic movies. I like TV shows from the 60s. I play classic jazz like Coltrane and Parker and Bird and Ellington. Anyway, I digress. That's chart number 1. Here is chart numero 2. This one's a really good double cup. This is a dual cup breakout. And it's not the minor weak cups. It's a broad, wide cup and then a sharp momentum cup on high volume, on 15-day high volume. So this is chart number 2. And again, once you join as a member at Trading the Open, you can log in and see the identity of these because it's in the members area right now as we speak. This is chart number 3. Okay? So live Trading the Open room members only, you can log in and see that chart. This is a good example of what did I tell you guys about earlier. I told you so. Kind of irritating, but I'm right. You know, workaholic genius, UCLA grad, multi-degrees, blah, blah, blah. Anyway, sequential gap continuations. Okay, this thing gapped all over the place. Up continuations the vast majority of the time. Up continuation, that was a gap fade. That one was a gap continuation. Gap continued, gap continued, gap continued. Made my case, right? Minor gaps that continue sequentially, so even if you miss the first one or even the second one, oftentimes you get multiple opportunities to hit these things, like Netflix, right, lately, or Tesla, or some of these others that high runners. Anyway, that is chart number 3. Chart number 4. It's funny, all my competitors are logging in to see how these are really done. You guys, you should work with me and be an affiliate and sell my stuff. I'm best in class. You can't compete with my presentation and proof that I really trade and awesome technical skills, so just give up and work with me instead. I could say that because I'm rich. Anyway, it's good to be the king. This is chart number 4, guys. Chart number 4, gap continuation. This is the biggest gap chart I've seen out there. Gap from 35 to 43 and ran on up 3.5 points to 46.5. Who would have known, right? As my colleague Peter Bain would say. Who would have guessed? Well, I did. I told you guys that gaps continue. This is a big gap that ran up another 3 points. Keep this one on the radar. This is number 4. And the last one, chart number 5, is this one. Not as good, not quite as good as the others, but still a very worthwhile chart because it has a cup pattern continuation with a minor gap run on Friday session. So we've got lots of charts out there. The markets have been great. I hope that you guys, it's an amazing time to be trading right now. I mean, the money's there if you know how to trade. Potentially the money's there, I should say. Anyway, let's run through just quickly the top picks again. PVA, a cheapie. Come on, PVA. I don't know what that company is. Penn, Virginia, maybe? I don't know. Penn. Anyway, PVA is a cheapie. The other ones, STZ, TWX, Time Warner, UBNT, don't even want to pronounce the name of that company. Good gap. Actually, minor gaps continue, but this gap continued. Inverse head and shoulders pattern. You can see my equities.com article on that. And Whiting Pete. So that does it. What do you guys think? I like to give a good professional presentation, and I hope that this keeps you whole for the week ahead and you learn some things to help you stay on the right side of your trades. And thanks for being here. I appreciate it. I will stick around for a few minutes and graciously answer a few questions. Remember, like I say, I can't say this from the rooftops loud enough to thousands of active traders, or in today's case, 2,300 and, do we have bigger numbers? 2,369. So 2,369 people registered for this event. You could see big turnout. So thanks, everyone.